Good morning, Galaxy members. Today is Saturday, August 23rd, 2025. It's about 9:20 a.m. as I bring you the week ahead and kind of the review of what's going on in the markets. And as the title suggests, pivots. Fed did pivot. And here's Powell looking up and looking at the warning sign that policy change is ahead. Here's the problem. His actions, like I said before, Fed, they can't cut rates, they can't raise rates, they're going to be blamed for everything. And basically his pivot, he's blaming it on the job markets now, is going to create what we call stagflation, and that's what the topic is all about for today. So here's the disclaimer. For those of you watching it on YouTube and X.com, this is our disclaimer. Pause it, read it. If you agree, please move forward. And of course, my shameless plug about X.com/Galaxydoc Market. Follow us. There are a lot of commentaries and things like that you might find interesting. It is a little opinionated. I just really can't stand some of the stupidity that's going on in the world. But, I try to tone it down, but sometimes I just can't help myself. And also, follow us on YouTube.com. Subscribe there, comment, like us, and share, please. All right, so as everybody knows, the Powell basically stated that, the baseline outlook of the shifting balance of risk may warrant adjusting our policy stance. And what that means is that he's now saying, hey, the job market is soft and we don't really care about the inflation, and we're going to just put our target inflation from 2% to 3%, which he is admitting that there is inflation. Here's the translation. We will be cutting interest rates into a rising inflationary environment and declining environment. And that's what we call stagflation. Okay, so the markets really celebrated that, which we expected it to. And we're going to talk about some nuances of that celebration and why a pain or lots of pain is coming ahead for our economy. Okay, cutting rates into inflationary environment is hyperinflation. That's all it is, because it's already inflationary. You have all this money sloshing around, and then you add joblessness to that, is stagflation. Okay, so as a result of that, here's the thing that you would think in a healthy environment, something that's going to help the U.S. economy and the global economy for that matter would cause the dollar to rise. And that did not happen. What happened instead is that right on that news, as the markets became euphoric, we had the dollar just completely plummet. And that is indication of too much M2 money supply and inflation coming full circle into the economy. And that, basically there's devaluation of the U.S. dollar happening. So we know it's going in the opposite direction. This is not what was intended. So when the U.S. dollar plummets on that news, as the market takes it as a very, very positive news, it is telling you that the U.S. economy, and for that matter, the global economy, is in serious trouble. The dollar decline shows internal economic problems with that move. Okay, it's not something that's going to be solved with an interest rate cut. Like I've always said, the Federal Reserve cannot cut rates and they can't raise rates because of the amount of money that's been printed to oblivion. Somebody was saying that the amount of money that was printed, if they actually printed into US dollars, $100 bills, and if they stacked it on top of each other, we would go to the moon and come back. Think about that for a moment. That gives you a certain amount of perspective on this matter, why we're in this deep trouble. It's not about inflation or jobs. It's the amount of money that's been printed to oblivion, and now the system is broken. So this is what devaluation of the dollar looks like. And if you don't think that's coming, I got some news for you. And I don't care what people say, that you can't print that much money. And then now U.S. is, issuing bonds, but since no one's buying it, the Federal Reserve buys it back. Think about what they're doing there. That's like you maxing out your credit cards, printing money on a laser printer, and then paying the credit card holders, and they pretend that money's real. That's what's happening. Now, let's look at the 10-year yield. Yes, the 10-year yield dropped from this stratospheric 43.5, but we are still significantly above 36.5 at 42.6. It does absolutely nothing, and I believe that we may chop around these levels for a while, but really, inflation is not going away. Okay, they are cutting rates into a stagflationary environment, admitted that the job growth is non-existent, in fact, that people are losing jobs. And we've been talking about this on this channel forever, in our group forever, right? So what we got is a rising inflation, plummeting dollar, and the 10-year yield, which is measure of the 10-year U.S. Treasury bond, really has not budged. It is still very, very stubborn at 42.6. That's persistent inflation. And when they cut rates and then introduce more excess liquidity into the system, what do you think is going to happen? Okay. Now, let's talk about gold and silver, my favorite. Okay. So gold on that news, okay, if it was a very, very positive thing, if cutting rates was such a beautiful thing for the economy, okay, well, then gold should have been going down. Silver should have been going down. But instead, just like the US dollar plummeting, the gold skyrocketed higher. And you don't even talk to me about silver. Silver is my favorite precious metals. I believe it is my favorite trade and asset class that you can look into. It is the most suppressed asset in the world. And silver and gold basically grew a big stiffy and broke out. Now, what we're doing is we're now at this inflection point at 39.049 for the silver, and for gold, we're above this level of 3,400, finished around 3,417.2. We need to get above 3450 and take out this 34.1 for us to have a chance to get above 3900 all the way up to 4500. I believe silver is going to get above 50, probably start hitting 62 to 72 level, maybe even as high as 82 in the coming weeks. Okay, so and we know that the silver slam crew, this market is so rigged and it's so manipulated with paper shorts. Those people are covering their shorts slowly, trying to make it look like everything is fine, but it's not. They have been basically slamming the crap out of gold and silver, especially silver, to a point all they could do is get it maybe slightly below at 37. And their objective was keep this thing below this level right here, these dotted lines. But they failed. And now we have the situation where the price slams are not working, just like the US dollar plummeting. The whole system is broken, and people are going to be flocking into precious metals, and they're going to be asking for those precious metals without the paper. They want the physical precious metals. Okay, what comes next is going to be epic on these gold and silver, especially silver. What Fed just promised is hyperinflation, folks. All right. So one of the things that came up about 19 hours ago, it says spot silver above futures, a warning signal. And I looked at this, and this is absolutely true. Okay. When the spot price, this is the delivery price of gold and silver. So if you went to a precious metals exchange and then you bought gold and silver, that's the spot price. It was trading at 39.31. The September 2025 futures, we have some calls on this in our group, right? It's 38.99. When there is an inversion and a discrepancy between here, it means that the people are no longer demanding these futures contracts in US dollars or whatever currency that they have. They're demanding it in physicals, and they don't have that. Okay, LBMA and COMEX does not have that. Okay, so the problem now is that there is something called backwardation that may be happening on these futures contracts, which is going to cause an epic short squeeze of all lifetime. Okay. The other thing is from SR Sirocco report. I hope I said that right. really looked at this, and I think this is really interesting. We know that the Russians and the Chinese are buying the silvers, but the Saudi central bank just are taking large stakes, not in physicals, but they're taking large stakes in silver ETFs. The only reason why they might be doing that is they sense a major short squeeze coming, and they're probably trying to engineer a gamma squeeze. So you heard it here first. These are basically, all it takes is like a billionaire or like a sovereign fund here to just corner the market and demand delivery. Silver is going to shoot up above 100. Okay. I'm just saying right now, we need to get above 40 first. And then once it gets to 40, it's not going to stay there for very long. And we'll talk about that in my technical analysis. Here's something that I want you to look at. And this is the handle portion right here. We have a long 45, 50-year-old cup and a handle. And guess what happened? This is kind of our overhead resistance. This is that historical level. I know back in the 1980s, I think it was a little bit higher, 49.95. But the 47.95 is where we need to get out of. We just broke out of this, additional cup and a handle formation. Broke out and we're moving higher. Okay, if this is not warning you about what's to come, about inflation, you better have some physical assets in your possession, whether it's digital currency. Digital currency I consider physical assets even though they're digital, but gold and silver, right? There's going to be major pain coming to the real estate and commercial real estate space. And so what choices do you have? Okay, the stock market's at all-time high in a blow-off top fashion. We'll go over that in a second. Okay, so basically, this is the uptrend line on a monthly SPY. Every time we hit or breach that level, we got into a major financial situation. Here's the great financial crisis. Here is another 2022, and then we had our COVID, crash. And if we go further back, every time that this line is breached or exceeded, and we're in a blow-off top fashion right here, okay, the stock market was bullish on that news of the Fed. That's because a lot of M2 money supply sloshing around with nowhere to go. So it's going to go into these asset classes until it doesn't work. Now, the other one is LEI and CEI ratio showing recession warnings. And what I mean by that, I want to show you what could possibly go wrong with this. It's the leading economic index, LEI, and coincident economic index, CEI. And so basically, historically, whenever we basically come down into these levels where we are, and we had .com financial crisis and whatever is coming right now, I think this is a sovereign debt bomb that's about to blow up, or monetary shift that is coming. And so I want to show you something very, very interesting. Pay particular attention to this 1991. And so in 1991, the stock market was behaving just like where we were, the Desert Storm. The Persian Gulf War was just ended, and basically stocks rallied, and the Fed started cutting rates and everything else. That ended very, very badly towards the end of the year. And this is, I think, really what's really happening to our markets right now. And we're in a blow-off top fashion right now. Blow-off top, not fashion, but blow-off top process in the markets. And those of you that are super bullish and thinking we're going to the moon, I got news for you. The US dollar, the gold and silver, the Bitcoin and XRP, you got some? You better get some. Is warning you. This is a recession warning, folks. Okay? Basically right here. Right now, this is where we are. And as the 2025 ends, we're going to have some serious implications in our stock market and our economy in general. We are entering into a recession. Fed focusing away from the inflationary targets to jobs. Fed created all this. This is all on Jerome Powell, and Trump knows it. And that's basically why he's called him out on it, because Trump knows that cutting rates is going to destroy the markets. But he wants to blame Powell for that. Okay? So let's look at the sector analysis and then go into our real quick technicals. Okay, so on that news from the Fed, having a shift in sentiment, basically SPY have started with a red candle. This is a warning sign. Consumer discretionaries, popped a little bit. They're all showing you warning signs, right? This was about 2 weeks ago, I told you. And then Fed announces their pivot, And this is what we get. We get this situation where we get this rally, but you know what? They're all stalling out except for the discretionaries. They're breaking out a little bit, but everything else is stalling, has not had major impact, or they hit these major resistance levels and they pulled back. Okay. So, and here's one. Here's the financials, because they are being propped up by printed money. Financials, the banks are in serious trouble, but that's not the topic of the day. Here's the utilities, not participating. Okay. And then, of course, healthcare. We got some United. We're bullish on United. And I believe all the laggards that's where the money's going to go. Even if the stock market starts to correct and things like that, these will hold up stably. So the issue right now is that everything is stalling out. We're going to have to see what's going to happen. And I really was waiting for this blow off top, climax run to start happening. And I think we're right there. Okay. So let's get into our technical analysis really quick. Not going to spend too much time on this, but this is SPY on the weekly. Okay, we're running right into this dashed up trend line. We have some negative divergences forming. Volume is divergent. MACD histogram is divergent. Okay, we can possibly on this climax run up to this other line right here. Okay, move right up into that area, and that's totally fine. We're just not calling for any type of shorting yet. You got to do that individually on these high flyer stocks. Here's my McClellan summation index. This was signaling that Fed pivot a little bit. I think we're going to go right up to here and then start coming down. So there is some room for a pop next week. Very, very low volume, but watch gold, silver, US dollar, and 10-year yield and what's happening there. It's very, very important, especially Bitcoin and XRP. Okay. Here's the gold on the weekly, and gold basically is in a what? It's a bull flag formation, and we've been moving sideways. I believe we're going to start breaking out and start hitting all-time highs once more. And then silver, really same thing. Silver looks the same, doesn't it, as gold? It's really a bull flag formation on this weekly. And guess what happened? We started breaking out of this channel. We just got to get above this phase 2 alpha move and get over and start making a more vertical phase 3 move on our breakout. And it's very, very close. Silver has been so maligned and shorted with paper shorts, but those shorts are covering. There's evidence that that is happening. Okay, on the daily, not daily, but on monthly, we talked about this. This is basically that cup and a handle formation. This is the handle portion. We need to break out of this area, and I think we're going to be taking it out. I would not be surprised to see silver taking this 45 to 47, 95, 50 very, very shortly. So we're going to watch this very, very carefully, but the area that you need to focus on is these asset classes, as we now, Powell has confirmed the stagflation. Let's move on. Deutsche Bank, basically continuing to use the M2 money supply being propped up, but the thing is that this is not going to end well. Look at all these gaps. Not only that, Deutsche Bank holds one of the most toxic assets, and a lot of people think that they've sold off the Credit Suisse stuff. No, they didn't. It's buried under their balance sheet that they're not marking to market. Okay, this is a powder keg, just like the Evergrande situation in China is, and this will blow up. It's just going to take some time because the central banks have no interest in watching their crony banks fail. Okay, Schwab, on the other hand, is one of the short recommendations that we have in our group. Okay, and basically we have all these declining RSI. We're topping out. Okay, we continue to top out above this 80 MA, but once that breaks, we're going straight down right into this trend line. Okay, look at the MACD is about to form a death cross. Okay, a little freebie for everybody to look at. It's still not too late. United Healthcare, we talked about this. We are above this inflection point. Definitely watching United Healthcare very, very carefully right here. It's a beautiful setup, really. If you look at our volume, price volume action, we're at the bottom of the value area low, okay? And we just, this whole area is where the target range is. And so I'm not saying it's going to happen all at once, but it's really a low risk area to enter, even if I think market's going to crash or correct. You just saw what I'm talking about. Okay, so that's what we have. Okay, and then that's about it. So we've gone through the sector, went over really quickly about where I think the market is headed. It's all about gold, silver, XRP, Bitcoin, and some of these laggards that have been beaten down, like Chipotle, United Healthcare. Those are long positions, folks. Fed pivots into the rising inflation, goose the stocks, but will it last? Where is it blow off top? Yes, I think we're in the process of making that finally climax top on low volume. Okay, here's XRP, folks. XRP super important. I've been pounding the table when it pulled back into the 270 to 280 range, and so this is what happened. Okay. And this is every time it gets into this range, right, below 280, even below 290, that's accumulation range. The problem is people are going to be lined up to buy it at 1,000. They're not going to buy it when it's in the $2-3 range. Okay, so let's look at Bitcoin. Okay, here's the Bitcoin situation. Yes, Bitcoin has fallen from 124, but it's found the bottom. It's going to backtest a little bit and start moving higher as people realize that they can't stay in the fiat U.S. currencies, right? And this is from that last week. We're at 293. We even went further lower. And so, but, are you still not buying it? Okay, so that's the situation we have. All right, so Fed pivot is the black swan. They're cutting into rising inflation like almost a middle finger to Trump, right? And now they're blaming it on jobs. And, Trump says the job is strong. Powell says the job market is a concern. Battle of the stars, I guess. U.S. dollar plummets on the news of Fed pivot and language change. This is terrible. Okay, XRP and Bitcoin inflation hedge. So is gold and silver. Watch the banks. Silver is going to start making an epic run, folks. Okay, once it gets above 40, it probably will not stop until it hits at least 82. I think the shorter term target by probably October, we're going to hit 100, 120. All right, so watch silver. It's going to hit 50 plus imminently. I've been saying that for a few weeks, but Slam Crew keeps getting in the way, but they have not made any progress. Stagflation is coming. Gold and silver is warning, and then banks are betting Fed lowers rates on Wednesday, not Wednesday, but September meeting. So forget about that. Stagflation is coming. XRP and Bitcoin rallied on the news. XRP is still cheap all the way until $10. So thank you for listening. This is for those of you that are not my members that are watching it on YouTube or X. Follow me at Galaxydoc Market. Follow us, like us, share us, and above all, comment, good and bad. I don't care. Okay, and subscribe at YouTube, comment again, and share, and subscribe, right? And let's get some alpha. And on the description below, if you want to work with me, you can either email me at coachbrandon@protonmail.com or click on the link on Join Galaxy. Okay, and schedule a consultation. Okay, bye-bye.